I am bullish for the second half of the year, primarily because I'm very positive on the American consumer. As I think consumer spending is about 70% of GDP, and I think the typical American is going to go nuts post-pandemic. And I think there's a really strong desire to go out and experience life after having been cooped up for a very long period of time. And I think the savings rate that we've seen from American consumers has been substantial, and I think there's a lot of money in their pockets. We've already seen spending on consumer goods rise about 20% from February 2020, right before the pandemic started. So I think that is a positive indicator.
Yeah, I think you're exactly right. I mean, listen, it's just anecdotal. A couple weeks ago, tried to go to a mall in New Jersey, gave up because I was too lazy to park as far away as I had to, Emily, because there was so many people at the mall. Now it was also 100 degrees, and I think people just want to do something with air conditioning, but it was mind-blowing. All right, so let's talk about some individual ideas. One of the big, maybe not surprises of the year, is a company called Shopify taking on Amazon. Now everybody is kind of looking for maybe the next Shopify. You've identified a company called Big Commerce. I've heard the name, don't know a whole lot about them. Who are they? Why do you like them?
Well, first of all, I should say that we are not necessarily stock pickers, and we're believers in long-term asset allocation and sticking to your strategy. But that being said, we are always looking for, the next company that is going to be a breakout. BigCommerce is a Shopify competitor, and I am a big fan of the management team. The CEO, Brent Belm, was a contemporary of mine at McKinsey. And that management team is not going to fail. They established a partnership with Walmart earlier this year and have been growing very substantially. I think they're on fire. And they IPO. They're one of a group of companies that IPO'd in 2020 and then got caught up in, the retail trading frenzy. It hit a high and, up in the 160s, and it's fallen by well over half. So I think it's a good opportunity for a 5-year plus hold. I'm really excited about their prospects. And in my opinion, they're going to be the next Shopify.
Okay, Big Commerce there. And again, I understand you are not necessarily a straight stock picker, but there are companies that you do identify through macro trends. And listen,
yes,
Emily, we're coming out of the pandemic. And one of the predictions that I made back in December was that, and it's not some great wisdom, is that there's still a lot of bad stuff out there, even when COVID's gone. And we're getting a lot of diseases that we are going to have to solve and we're going to have to fight, healthcare, biotech, et cetera. There's a company called Schrodinger, not a biotech themselves, but they are a software company, a company that helps companies figure out and fight some of these diseases, SDGR. That's another name I think you like for long-term. Again, not a trade, you're not a trader, but a long-term structural hold.
Yes, I would put Schrodinger in the category of disruptive technology or disruptive software. And this is a company that was backed pretty early on by Bill Gates, and the Gates Foundation bought shares as recently as February. Investors were disappointed with their guidance in March, so the stock has fallen substantially from the high. But this is a company that invests very aggressively in R&D, and they have arrangements with 20 out of 20 of the top pharma companies. Basically, they've developed a computational model for identifying new molecules, which is going to really propel the biotech industry and, frankly, drug discovery in general.
Shepard Smith here. Thanks for watching CNBC on YouTube.